Well, it's been another rough year for muni bonds. Some investors are sensing opportunity. Muni bond mutual funds just posted their first week of inflows after 11 straight weeks of outflows. And my next guest likes some real estate and healthcare parts in particular. Joining me now to discuss is Jennifer Johnston, SVP and Director of Muni Bond Research at Franklin Templeton. Jennifer, welcome. Top level, what's going on in muni bond land these days?
Thanks for having me. So we've seen a lot of money on the sidelines right now. A lot of people have been trying to take advantage of high money market instrument rates, those types of things. But we really think now is the time to get into munis. There's several compelling reasons. The first one is that, we've seen spreads tighten. However, spreads are still above where they were before the 2022 sell-off. So there's still a lot of opportunities for additional tightening. Second, we think that with the tax equivalent yield, which takes into account the advantage of the tax exemption, you're seeing yields on taxable equivalent yields 80 basis points above corporate IG, 200 basis points above Treasury. So now is the time to get into the market and take advantage of that.
What is the deal with the flattening yield curve being a help here?
So we don't usually, whenever the Treasury curve inverts, we don't always see a flattening on the muni side, but we have this time. And we think that's going to be the trick to get everybody back into the muni market, is when we start to see a more flat yield curve.
And why is that?
Well, I think it's just keeping in competition with the volatility around kind of what the Fed was going to be doing with rates. People were worried and felt that you were going to see rates rise on the short-term side. So that's pushed up rates on the early part of the curve.
And we talked about healthcare, maybe multifamily, mass transit. These are some areas that for people who are poking around, maybe they should be looking here.
Well, I think that right now credit quality is pretty stable in the sector as a whole, or the asset class as a whole. We have been watching healthcare in particular. There have been some challenges on the fundamental side because of the cost of employing contract nurses to keep up with demands. We've seen some of that come back a little bit, and operating margins are starting to stabilize, to improve. There's still a ways to go, but we're starting to see some stabilization in that sector. And then on the mass transit side, everybody's heard the issues with return to office and the fact that this is hampered on transit. And we've always felt that what was going to get transit back on track was a combination of, differences in, scheduling, probably fare box increases or increases in your ticket, and then support from state and local governments. And this past budget cycle, we've seen some of the largest states provide aid to some of these mass transit systems. So it's not over. They've still got some other work to do, but we're starting to see that support we've been looking for.
All right. People are sniffing around, looking for opportunity. Jennifer, thanks so much. We appreciate it today.
Thank you, Kelly.
Jennifer Johnston with Franklin Templeton.